Welcome back to Primary Source China Investment. Peng.guo and I are here this week for show M3. And we thought we'd circle back to a topic we covered many months ago about the private fund managers in China. And I think the headline here is, this is a big industry. It may not be growing as much as it was in the past, but it's big and it doesn't seem to be going away despite the downturn in the market earlier in the year. So what is this private market? Well, the Asset Management Association of China has 25,000 approved managers, and those 25,000 manage 133,000 funds. Those 133,000 funds have 20 trillion yuan renminbi, or $3 trillion US. So just a quick math about the average size. The average size is 100 million renminbi, about 22 million US. And anybody who's managed money for a living understands that 22 million US probably doesn't pay the bills in terms of a management fee, but the carry is where people are really looking at. I did want to thank our friend Chris Zhang at China Fortune Securities for sending a lot of this research over. So Peng.guo, what's your thoughts about where these private funds have been, where they're going, and maybe what's happening?
I think a private fund is really give the opportunity for the new fund managers in China. So because it get a little bit low threshold, and also as long as you get the seed capital, you can start it. That really give the good opportunities. It's much better than the United States. If you want to start a hedge fund, you need to reach the 1 million 5 years history. So it's almost impossible to start it in the United States.
So you think the barrier to entry is still pretty low?
That's right. So that is why they get so many fund managers. And secondly, in this market, it also gives great opportunities for all the international companies. So they can easily come in and start the fund without too much regulation or compliance related work. All the big hedge fund companies, or the big mutual fund companies, they're already in China started the private fund.
Right. So this is, and it's also very different than the retail market. Just want to make a point here. So these are not retail mutual funds. They're not necessarily for the retail distribution. These are private funds for high net worth individuals or institutions that are launched on the mainland.
That's true.
Right.
But think about it, and also there's a lot of the institution invest in those funds, but behind those institutions, they still get many monies from the individual investors by the different ways. So they put them together to do the FOF and MOB to select the fund manager.
Right. So the institution may gather a lot of their clients and then make one investment into a private fund.
That's true. Yeah.
All right. So let's look at, we're going to put a chart up here. It's a little bit confusing to just follow along here. So where do these funds invest? So a preponderance of these is what we might expect: investment in the securities business. So in stocks and bonds. So of the 133,000 funds, about 83,000 of those are in securities. The second biggest is private equity. And then the third biggest is venture capital. So Peng.guo and I, we're not experts here, but that's a lot of money in the private equity and venture space. You can see the size of that is about 12 billion renminbi, which is actually bigger than the money that's in what we'll call the traditional, stocks and bonds, which is about 5.8 billion renminbi. So that's a lot of money in the VC and private equity space.
Private equity as well as the security investment are the two big parts of the private fund market. So that is which is different from you just in the securities market, and also the strategy and area. You can imagine that's pretty cover everything.
I'm not sure how the breakdown. The Asset Management Association in China, the AMAC, they break this down in terms of private equity and venture, and I'm not sure where they draw that line, but I'll leave it to them to define the space. I mean, We're really focused on this.
They strictly separate these two kind of the fund. So
Right.
you should choose either the private equity or do the securities investments. That's a totally different fund. You cannot mix them together.
No, right. What I'm saying is the difference between venture capital and private equity. I mean, I'm not going to.
That is no big difference.
Yeah, the series A, B, C, or D. I mean, I'm not an expert here. I did want to switch over a little bit to the performance side, and given the breadth and depth of this information, this is only as of the end of May, so we'll have to turn our clocks back a little bit. But since the end of May, there's this what we'll look at as equity long, because what's going to be the benchmark there? That on the equities long, the benchmark is going to be the CSI 300, right? So that's the major market index. Although we have some problems with that index, that's the standard benchmark. So year to date, as of the end of May, equity long was down 14.25%. And remember, CSI 300 was down 17.18. So you do have a little bit of outperformance here. I don't think anybody's celebrating that outperformance, but you do have a little bit of outperformance. And incidentally, you do have a little bit lower volatility. On a yearly basis, the equity long strategies have about a 12% volatility, and the CSI 300 has about 13.5% volatility. So you do have a little bit better performance and a little bit lower volatility.
Yeah, that is the two things. Performance, as long as touch this area, you have to need to talk about two things. Firstly, what's the investor's expectation? Secondly, how your performance can beat the expectation or not beat the expectation. That's the key things for the private fund. I think, in my understanding, China investors, their expectations always get changed. While in the uptrend, they want to switch to the equity, and while in the down, they want to do the conservative bond. So that really means no matter what happened, the client expectation always change. Actually, all the private equity fund, they dynamically balance risk and risky and low risk asset. So they do the they can do like the daily rebalance or the quarterly or whatever strategy they do it. So that really means it's hard to see your product outperform CSI 300 or not
over the long term. Yeah,
that's true.
I think what you're saying, and for people familiar with investment terminology, within like an equities long strategy, the portfolio manager is doing asset allocation. They may be taking off equity and holding cash when the market is going down. So they are doing active asset allocation, even in an equities long portfolio.
That's exactly right.
Yeah. You did mention one interesting thing about the bonds, and this is something we talked about the other week. The China bond index has performed as expected. As of the end of May, up 1.93%, and the annualized volatility is 1.68. This is, as advertised. The China fixed income market is as advertised, and this is despite defaults in the big property names, which is still going through. There was a lot of articles this week about how this is only the first drop in the bucket, and that remains to be seen. But certainly in the first half of the year, there was not what we would call a Lehman event in the property market.
Yeah, those bond investment, in my understanding, is probably not get too much attention in the private fund market, because they are all actively seeking for the alpha as well as the return. Bond market is overall is not attractive. The only attractive is for the fourth, so fund of fund. They combine the bond as a kind of the like the foundation to provide the return for the investors.
Yeah, and also, you look at the fund of fund. We're going to put that up just because we're talking about it. The volatility for fund of fund is significantly lower than the equity market because of that asset allocation.
That's exactly right. So that is very helpful in the asset allocation area.
So final question, Peng.guo, I'm going to put you on the spot here. So you have 25,000 fund managers managing 133,000 funds. How do you pick them?
I think that's the two-way. One is based on the marketing. So there's some of big companies still get an advantage in this area. Still the 20% of a company take the 80% of market shares. So always the big name, they get more. But in reality is the performance sometimes it really sucks and also hurt the investors significantly. That's not a joke, because their strategies default or the market style, they change it quickly. So they always just screw up the things.
It's performance based. I mean, if your operations are great and your marketing is great and your risk management is great, that doesn't matter if you cannot produce returns.
That's exactly right. So that means give the opportunities for other fund managers rather than the one or a few big companies control everything in this market. So,
but it's not easy because you have a very dynamic market. You have equity market that has high volatility. This year you had commodity prices all over the place. You can't be one strategy for every investor. I mean, it's impossible to be an expert in everything.
That's exactly right. So that is back to the key things. The marketing as well as the investor education is pretty important to ensure investors stay in your fund product for a long time, and they trust your strategy. Even your withdraw and change, they would like to stay in your place. That means you still need to offer good customer service.
Well, we have that problem in the U.S. too. I mean, you have a lot of people that make crazy bets, and there was people talking that the U.S. may have lost a generation of investors given the investment in the Robin Hoods and the GameStops and all that other AMCs and stuff like that. So it remains to be seen.
But I also believe the passive investment, index investment still have a good futures in China. But you need to invest the uptrend. That's it. The uptrend is really outperform all the major fund product in the market. That is the most important things for the successful.
Yeah, I think in a future show we're going to talk a little bit about the index, because the major market index in China, like the CSI 300, I mean, it's becoming really vestigial. I mean, it's not useful, because if you have the CSI 300 and it doesn't include names like Tencent, Alibaba, Jingdong, these big names that are really Chinese companies for Chinese customers, the CSI 300 doesn't reflect real China equity. So I do think there's an opportunity for an indexing company to come up with a real China benchmark.
Yeah, I think that's true. That is also back to the most fundamental things of the investment, market efficiency. Because of the high efficiency in this China market, definitely index investment is much better than the active investment. Because that you cannot beat the market efficiency in the long run.
That's true. That's true. Well, with that, we're going to leave it there. Thanks for tuning in to show M3, and we'll see you next week.
Thank you.